Falling commodity prices have been treated as one of the clearest indications available that China's resource-hungry economy is slowing. Yet the latest data on metals consumption paint a more nuanced picture, showing that demand is not as bad as perhaps prices suggest. HSBC, for instance, estimates that Chinese copper demand rose by 1.8% last year. Not great, but not horrible either. In absolute tons, China is still consuming a large proportion of the Earth's raw materials, especially metals. For instance, China consumes over 40% of the world's copper. No other country comes close. But it is a slowdown in the rate of growth that is alarming some market participants. Part of that is due to the incredible surge in growth in commodity demand that took place in China over the past decade, a rate probably unprecedented in human history. That rate of growth was especially stunning for the world because during that period, demand for commodities such as metals in the Western world barely grew at all. So nearly almost all of the growth in global demand came from China. That led to many fears at the time that the world would even run out of resources, or that China would grab them all. Partly in response, miners invested billions of dollars in new supply. But a lot of that supply was based on projections that the double-digit growth rates in China would continue as the country continued to urbanize. But that's not happened. And so prices, which are of course driven by supply as well as demand, have collapsed.